Welcome to weekly view on markets. This week, markets were under the influence of election results. They were swaying to election results. Big up move was seen on Monday due to the prediction of exit polls. And on Tuesday, we have seen a sharp correction as the election results were in contradiction to the exit poll. Markets recovered on Wednesday, Thursday, and Friday. And by Friday, they recouped all the losses that was witnessed on Tuesday. Market closed near record highs on Friday. What triggered the market recovery? Emerging political stability, continuation of economic policies, and reforms triggered the market rally from the low points. Market is expected to touch a new high in the coming week on the back of optimism generated by the formation of the new government. Besides this, macroeconomic fundamentals of our economy was quite strong. Good monsoon is predicted. Higher growth uh, estimated by RBI. RBI has upgraded the GDP growth from 7 to 7.2%, and this will result in good corporate earnings. These are the drivers for the markets in the coming weeks and months. Now let us look at the market levels. Nifty has closed at 23,290 with the 759 points gain for the week. That is 3.37% gain. Bank Nifty closed at 49,803 with a gain of 819 points, 1.67%. Mid-cap index closed at 53,194 with a gain of 1,489 points, that's 2.88%. Small cap index closed at 17,215 with a gain of 508 points, 3.11% gain. India VIX has fallen sharply. It is at 16.88. It has fallen by more than 31% for this week. Before the election results, the India VIX was moving up, and now after the results are announced, the implied volatility in the market has come down. That is the reason we see a sharp fall in the India VIX. Now let us look at different sectors. Almost all the sectors have closed in the green for this week, despite the high volatility, except the PSU banks, which closed with a loss of 2.04%. Information technology gained highest 8.60%. So this is not due to domestic factor. This is due to rate cut in the European Central Bank. ECB has cut the rates by 0.25 basis point during the meeting held in this week. So those companies, technology companies who have got good exposure to Europe markets and many other exporting companies, they all gained as the interest rate fall in Europe is going to be favorable for those companies. That is the reason we see a big gain in IT companies during this week. FMCG sector gained about 7.11%. Auto companies gained about 6.83%. Consumption gained about 6.19%. Media gained about 5.3936%. Realty, pharma, healthcare, manufacturing, consumer durables, NBFCs all gained more than 2%. Commodities and metals gained about 2%. So most of the sector gained during this week. Despite the sharp fall on Tuesday, the market have gained during the week. There were several other factors than just the political news. The RBI has announced a bi-monthly policy where they have not changed the rates, and they have upgraded the GDP growth for FY25 from 7 to 7.2%. RBI forex reserves are at the highest record levels. So these are all the factors which are driving the markets. Now let us look at charts. This is the daily chart of Nifty. On Monday, market has recorded a high of 23. Nifty has recorded a high of 23,338, and on Tuesday we have seen this sharp fall, and by Friday it has closed at 22,290, just almost near the high recorded on Monday. So the entire losses due to the election results has been recouped, and markets are set to go higher in the coming weeks. This is the chart of Nifty Mid Cap Index. Mid Cap Index also recouped almost all the losses that it suffered on the day of the election results. If we look at the overall chart structure, it is moving in this channel, and the channel is getting narrower. Now it has closed above this channel. So the chart structure indicates that there is more upside in the Nifty Mid Cap Index in coming weeks. This is the chart of Nifty Small Cap Index. Small Cap Index closed almost near the record high. The highest level was 17,424. Now Nifty Small Cap Index has closed at 17,215, and it has crossed this resistance line and closed above that. The chart structure indicates that there is more upside in the small cap index also. The chart of Bank Nifty index. Bank Nifty index is progressively moving in a upward trending channel. You can see, uniformly it is dropping, coming to the support level, and again pulling back. Now it has recovered most of the losses of the election day results, and the structure of the chart indicates that it is Bank Nifty is expected to go towards 51,000 in the coming week. Now let us look at some of the fundamental factors of the market. Election results were one of the triggers for the market. There were other triggers for the market in this week. That is why we have seen a lot of buoyancy in the market. RBI MPC meeting was held during this week, and Monetary Policy Committee has not raised the interest rates. They have held the interest rate, and in future there is a possibility that interest rate will be reduced. That is why market is quite happy. On Friday, market has given a big rally after the meeting of the MPC committee. RBI has forecast the GDP growth for FY25 at 7.2. Earlier estimate was 7%. They have upgraded it to 7.2. RBI forex reserves is at a record high of 651.5 billion for this week. And one more important development is that European Central Bank has cut the interest rate by 25 basis points during this week. This has resulted in a rally of IT, pharma, and other export-oriented companies. These companies are the beneficiaries of lower interest rate in the Europe. They have forex rate is at 83.38. Dollar index is steady at 104.94. Brent crude price is at 79.85. This has been consistently coming down. Lower crude price is another good factor for the Indian economy. This is another trigger for the markets to go up. Gold price after hitting around 74,000, now it is at 71,341 for 10 year 24 carat. FIIs have net sold 13,718 crore during this week in equity, and DIIs bought 5,579 crore in equity during this week. And FII at the later part of the week have started buying. They sold heavily on the result day when market fell sharply, but by Friday they have become buyers. And FII buying is likely to continue because the headwind of election results is gone away, and they are likely to buy in coming weeks. FII buying and DII buying both will take the markets to the higher levels. Markets have bounced back quickly from the crash of the election result day. Market believes that there will be political stability, continuation of economic policies and reforms. That is why markets have given sharp recovery from the lows. Mutual fund investors should not worry about day-to-day volatility. If market falls, also market will stage a quick recovery because the fundamentals of the economy and corporate earnings are quite good at this point of time. So mutual fund investors should continue their SIP. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends, and if you have any questions, you can ask your questions, which I will reply. We'll meet again next week. Thank you.